What's going on, everybody? If you will, give me 1 second to get set up. I know we're starting off a little bit late. Do apologize. Better late than never in this case for us being able to get started. And just need to make sure that everything is situated before we end up getting from there. And we end up getting started in 1 quick second. I hope everybody's doing very well. Give me 1 second. Right there, man. All right, let's go. We are live. This is Travis Witherspoon from Carter Cow Trading on YouTube and on Carter Cow Trading on Instagram and on Facebook. I hope everybody's doing very well. This is Trade with Travis on YouTube. Hopefully everybody's doing very well. This is the last day of the month when it comes down to October in trading. So I hope everybody's doing very well when it comes down to that. Let's go ahead and get through the disclaimer. Then after that, we'll take a look at some pairs. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind and understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, getting ready to show myself onto the screen. We're getting ready to go on the black version today. Hope everybody's doing very well. Show myself on Instagram. Instagram, how you doing? Get ready to show myself on YouTube and Facebook, whichever one shows first. There it is. It's on YouTube right now. Hey, how you doing? I hope everybody's doing very well. And on Facebook, typically that shows up last for us to lag. I don't know why, but there it is. Hope everybody's doing very well. Two things. One, make sure that if you're watching this video live, please make sure that you share this video to someone else that you think that will be interested in being able to learn Forex trading. I had the very good opportunity of being able to meet a lot of people last night and being able to talk to them about this investing in general and being able to learn. And obviously, we have our boot camp each and every week, but it's always good to be able to talk to people that don't know about it and being able to express how much Forex can end up being a good bang for your buck investing or investment when it comes down to being able to do it. Now, it's hard work, absolutely. That's the reason why we come here live stream each and every day, try to see if we can simplify some of the things when it comes down to it. But we have to keep that in mind when it comes down to trading too. It can be hard. Sometimes you just have to be able to put your best foot forward, and then after that, trade from there. Now, let's talk about what happened today, because today was a big day. We end up having retail sales for the Eurozone in Italy. We end up having it for Germany. We end up having GDP for Germany and the Eurozone as well, to see how well they actually end up doing. And from all intents and purposes of being able to look at the news, that information was very well. So pairs like the Euro, United States dollar, Euro Aussie, Euro CAD will probably end up being in a very good position. Or at least will probably end up being in a position where the market is probably overbought right now. But if you got in a little bit earlier based off of that move, because I know we was talking about being able to look to buy on that one, probably about on Monday, then you might have an opportunity of being able to make some money off of that one, or you probably should be in a position to where you're already up on that one. So with that being said, here's our current positions right now. We got a sea of red right now that's actually going on. I was looking at it a little bit earlier. It was actually up 30 pips on the US yen, and it kind of flipped over. Australian dollar, United States dollar was only down 8 pips right there on the first pair. Not necessarily worried about that as much. I just want to see how this market is going to end up reacting. New Zealand dollar, Swiss franc, that is a little bit longer term of a trade when it comes down to the overall movement. Down 33 pips right now, but that one has about 500 pips overall movement to the downside. So once again, we're in the early days of that movement. Looking at the US yen on our second trade, we're down 28 pips, but that was the trade where we said that was going to end up splitting our risk. So we'll be okay when it comes down to that. And the second New Zealand dollar, Swiss franc trade, we're down 44 pips. So overall, still kind of early days when it comes down to being able to trade these, but we have to keep that in mind while we're trading. It takes patience sometimes to be able to allow the market to be able to move the way that you want, and that's the one thing that I've been struggling with when it comes down to the Nas 100. I found very good positions, but I haven't been as patient, or my stop loss has been taking me out. So we actually end up going 0 for 2 on the Nas 100 yesterday. One partially was my fault. The other one was definitely not my fault because of obviously what's going on with the weather in our area. And if you know, you know when it comes down to that. So let's go ahead and take a look at it. Big three. We end up saying that this market was considered to be bearish. And then we also talked about this small little consolidation area that we've been having from basically 12,000 to about 12,084. And this market has since pushed above this overall trend line to the top side. So the question is, when we're looking at this pair, is this market bullish or is this market bearish? Well, it's kind of hard to say, because if you look at what's going on with the weekly, you can see on the weekly that this market is basically in the sell zone. We see that it's broken a counter trend line break, but it's basically retesting the zone already. Now, this is the perfect zone to be able to look at from a weekly standpoint to be able to sell on the dollar. Well, the next thing that I'll end up bringing to your thought process would be, okay, well, if that's the case, then what's going to happen after November 3rd? Because obviously we have elections. We have elections on November 3rd. I think the market is moving in consolidation right now, because we don't know who's going to end up being the new president, and what's going to end up being some of the policies and everything else like that could happen with the market. So the question is, should we be looking at possibly this? Should we be looking at possibly just saying that we are out of all U.S. based pairs until we end up figuring out some information about the election? Now, that could be a very good plausible answer. If you're not in any type of pairs, I will almost say just wait until November 3rd to be able to find some, especially if you're a long-term trader. If you're a scalper or a consolidated trader, this may be a good position to be looking at for selling positions. But the one thing that I don't like, if we are saying that, then we're saying that the market is in consolidation. If we're saying that the market is in consolidation, then we shouldn't be doing anything in the first place. Okay, so hopefully that makes sense. I'm going to be out on every other pair aside from the US yen that I'm already in, and see how that market kind of moves when it comes down to that pair. I'm also in the Australian dollar, United States dollar. But if the market keeps on moving up, then obviously we're going to end up looking at trading. If the market is going to keep on moving down, then we need to keep our eyes out on that. All right, now oil. This is what we have. Market has broken that consolidation. So we're not looking at the consolidation anymore. We're starting to look at downside movement. So the question is, where's this market expected to be able to go? Can we get a trend line break? Can we get a retest right around the $37 mark, and then look to be able to sell back down to $31.38 for this overall position? I believe that right now we're in a position to where we have to be able to wait a little bit, just because the market is basically in a buy zone. But because the market is in a buy zone, that's giving us opportunity to be able to allow the market to be able to push back up and kind of get right around that $37 mark. If the market kind of pushes away from us, then obviously we have to keep that in mind when it comes down to movement, and be able to go from there and be able to get our eyes out on that overall. Now, the next thing that we have to look at, obviously, if we go back to the 2-hour and be able to see what's going on with that, we'll see that the market is basically retracing. Ideally, if we can be able to get the market into the sweet spot, somewhere around that $37, $38 mark as a high price, and then have it fall back down, then that'll be a good price to be able to get into. But currently, this is a very early day when it comes down to this pair for the new swing of the market. So currently, right now, I'm out and I'm not looking to be able to get in. I think this market being in a sell zone right now is a false move. Okay, so I wouldn't pay attention to that. We're looking at what's happening with gold. Gold actually ended up moving to the downside, expecting that the US dollar was going to end up being strong. It actually ended up breaking the A of this move as well. So now we should only look at downside moves, or start looking at crown field moves over to the downside when it comes down to this overall movement, at least for right now, until the market ends up getting towards the 5-0 area. If it breaks below the 382 and starts moving below the 5-0, then it turns into a bad trade overall. Now, the daily's in the buy zone. The weekly is in the buy zone as well, right? We should be looking for overall buy trades. And the question is, should we forego looking at this overall move to the downside that happened to be able to see if we can be able to get in, going to the upside for us to trade? And that's something that we have to consider for this overall movement. What I would say is, we're looking at this from a daily perspective. The market is at the 382. Typically, when that happens, we're looking for a little bit more of a retracement in that for that happening. If we can be able to get that, then after that, I will look at being able to buy long term. But currently, right now, all of the upfield movements and everything else that we have projected does not matter anymore. The consolidation that we looked at does not matter anymore. Everything else is gone from there. This uptrend line is still kind of important for that overall movement, but we have to pay attention to what's going on with that. Hey, Trade with Anna, I hope everything's going well with you. So looking at being able to, I'm looking at overall being able to watch the counter trend line break to the upside if that does happen. If it does not, happen, then it's not the end of the world when it comes down to this trade. I do want to see how this market kind of reacts to this overall setup and breaks the trend line from the upside with this overall position. We do have some minor support at 1844. If we do get that, then obviously we'll look at being able to buy it back up to the upside. But I would have to look at point of control to be able to give a better answer when it comes down to that movement. So right now, out of gold when it comes down to that. Let's go to our positions that we're in. I want to start off by looking at the US Japanese yen, and then after that, we'll look at the Australian dollar, United States dollar, and see where we're at when it comes down to those pairs. We're getting the NAS, and we're getting everything else a little bit later on. All right, let's go with the US yen first. So let's talk about what happened, because I got into this trade. I got into a second entry earlier this morning based off of a counter trend line break at 104.32. Obviously, the weekly is expected to keep on moving down. The market is expected to go down to 99.20 overall for the long-term movement. We are looking at positions to where we're looking at taking profit right around that 101 area if the market keeps on moving down to the downside. Now, if the market pops up to the upside and it takes us out of that position, obviously we'll have a small little loss. It's not the end of the world if it does happen like that, but I do think that we have a pretty good position for being able to trade to the downside. Now, the one thing that I don't like is that the market is getting closer to the buy zone. Right, the market is getting closer to the buy zone, and that means that from other people's trading, they might end up trying to buy it back up and try to test this overall support level. Past support level turn future resistance level at 104.90 again. Well, that's where our stop loss is. Earlier this morning, what ended up happening was the market ended up having a strong move to the downside. It actually ended up getting as low as our original position. I want to see, as low as our original position, which was at 104.12. If I would have woke up and seen that, obviously, with what's happening right now, it looks like it's having more of an indecision candlestick right now. That might have been a position where I possibly may end up getting out from that overall position. But currently, right now, there's nothing we can be able to do about that. Currently, we'll take a look at the 2 hour and see how the market is kind of playing out for that position as well. So we had this break that I ended up selling a little bit earlier. Market ended up falling from there. about 30 something pips before actually popping back up to the upside. Basically end up making a V-shaped return. So it's looking like it's making higher highs and higher lows at this particular point. The market was in the sell zone when we ended up taking this earlier sale, but we ended up talking about how the market was finding resistance at 104. And we said that if this market never broke 104, then it was probably going to end up popping back up to the upside and then trying to retest before trying to break 104 eventually. So the thing is, at this particular point, this market is moving into the buy zone and the daily is moving into the buy zone. I don't like what I'm seeing overall right now. And the question is, do we look to be able to get out and be able to take a small loss, or do we ride our plan and just remain to be patient? There's a couple things that are going against us, and I just want to talk about those. One, November 3rd is coming up very quickly when it comes down to elections, and whatever happens with that, I always believe in getting out of the market before the news comes out with the election. The market could swing violently, just like how Brexit happens and everything else like that. So my thing is this: I'm looking at this trend line from the way that the market ended up moving. If it remains to be below that trend line, and let's say we end up getting a little bit more a selling action between that action from there, then I would consider being able to stay in. If the market continues to be able to move down, or the market continues to move up and it breaks past that trend line and has a convincing move, then I go ahead and take the small little loss. And then after that, I keep my eyes open for other opportunities, just knowing that it's not ready yet from this overall position. So maybe I might be able to get it up at 104.90 at the raw. If I do take that loss, let's talk about the hit. If I take that loss, it'll be $8 on one, and it end up being $28 on the other one. So you're talking about $36 for its overall loss. It's not that bad when you're looking at it from that standpoint. All things considered, for us being able to go from there. But right now, I'm gonna hold out hope and see where we are, and then after that, we'll pay attention to it a little bit later on. All right, Australian dollar, United States dollar. Let's see what has happened. This one is a little bit different. Market, we go to the 2 hour, we go to the weekly, the market is getting closer to the buy zone. All right, meaning that we should be looking at possible buying opportunities. But you look at what's happening with the weekly is still considered to me being bearish, but it's falling within this overall consolidated area again. We talked about if the market ended up finding some resistance and not being able to break past 70 before November 3rd. We need to really kind of pay attention to that, because the market could move back up to 72. And that is exactly what happened. Market ended up breaking down, did not go below. It literally tapped at 70 and then popped right back up to the upside. Currently, the market's at 70.45. So the people that end up trading it as consolidation have basically ended up winning out on this overall move, at least for right now. Once again, we don't know what's going to end up happening on the 3rd, right? And I don't want to speculate, don't want to guess. I know that if this market gets away from us and we're in a bad position, then this market can be able to run very quickly for its overall move. But overall, let's see what's happening on the daily, and let's see what's happening on the 2 hour. Maybe we can be able to make a decision. Right now on the daily, the market is getting closer. The market is coming from the sell zone to the buy zone. So that's the reason why we end up getting in. We're getting in based off of this sale. We end up having a strong counter trend line break to the downside. We end up having an indecision. Give me a second. We end up having. Okay, sorry about that. We end up having a strong bearish engulfing candlestick. They end up having a couple days ago, and that was the reason why we end up getting in. We end up having an indecision candlestick from here. Currently, right now, we're looking at an indecision candlestick at the beginning of the morning, but all intents and purposes, this market ends up breaking below 70, then it's going to end up running down to 68 if it does do that. Obviously, we'll need a little bit of a push, but that's the thing that we're looking for. Stop loss I have at 70.84 currently at this particular mark, if the market does break back up. All right, 2 hour, what we're looking at on the 2 hour is that the market is closer to the sell zone. We're seeing a little bit of consolidation as we speak right now. So the market has tried to tap and break this thing about 4 times. Typically, that's a bad sign when it comes down to movement, and we just have to keep that in mind. So, a warning area for exit if the market does not break this overall spot, and we have to be able to pay attention to it, is that if the market breaks above 70.60 and starts having a convincing move to the upside, then once again, it's not going to happen, at least not on this move, because the market has tried to break below 70 and has not been able to break since then. Okay, so that's something that we have to pay attention to. That's about 18 pips away if the market keeps on moving to the upside. Obviously, the Asian session is pretty much over with, so we're going to see how the bulls, I mean, in this case, the bears start to react toward this position a little bit later on today. But that's something that we have to pay attention to as well. U.S. based pairs, that's pretty much what we have right now. I want to pay attention to what happened with the euro U.S. dollar from this position a little bit earlier today. And kind of surprising, the market fell. Even based off of having good GDP news, which is still kind of surprising. Obviously, the coronavirus, they have a lot more coronavirus cases that have been going on. This market has fell down to a point of control at 116.50 that we have to be able to take a look at. But once again, it has fell out of that consolidated area as well. So even though we looked at this and said that, yeah, the Eurozone ended up having very good news, this is not showing up on the charts. So the fundamentals is not acting accordingly based off of what the GDP ended up saying. Kind of out of this pair. Not even gonna look at this one until probably November 3rd to see what's gonna happen with that. All right, so we'll take a look at two more pairs currently right now, and we'll end up going from there. First pair I want to pay attention to is the NAS 100. Let's talk about what we end up doing. We actually end up taking a sell on this pair. We wanted to be able to go to the 2-hour D extension. The 2-hour D extension was expected to be at 10,914 or 940. We wanted to get out at 11,000. We ended up taking a sell because it was in an R3 position. Ended up giving us a very strong move to the downside and then pushed right back up to the upside. Went all the way up to hit the sorry about that. Went all the way up to hit the 50-day moving average. As soon as it hit the 50-day moving average, it basically tapped it and then rejected right back down, making a new lower low. Currently, right now, the market is in the no trade zone, and the daily is basically in the buy zone. So I tried to be able to take a trade on this pair yesterday to the downside. I took a trade to the upside and didn't stay into it long enough, and that's my fault. So I lost going both ways because of not being patient. If we're looking at what's happening right now, there's really no trade to be able to take. The only thing that I would consider is if this market makes another upside move and then possibly hits the moving average again. If it rejects off the moving average again, and then after that starts to make a little bit of a slow move to the downside, then I look at scalping the market. But other than that, there's pretty much no position on that one. I'm not necessarily even interested in being able to do that, especially because it's Friday. I think more people are going to look at being able to get in and get out of trades, and then if there's something that happens, then they'll take it. If there's something that's not there, then they'll get away from it. And I believe this. I believe the same way when it comes down to that. When it comes down to that pair. So we are right now, we're starting off the weekend, or at least the new month, bearish right now. We have a few pairs that I think that have very good opportunity for being able to trade. Maybe we might be able to get a higher price on the New Zealand dollar Swiss franc. We got that from our automated system, and I need to see if my automated system is actually still in this overall pair. That will make a lot of sense if I can be able to see what's happening with that one. This one came from our Pathfinder Auto, and with our Pathfinder Auto, looking at this overall pair, typically remember it looks at MACD movement, saying depending on the crossover between the MACDs, if both of them happen inside a sell zone at the same time. Or sells on a buy zone at the same time, then you have an opportunity to trade it. If it doesn't, then obviously you just stay away from it. But I want to see what's happening with that pair. If it's out, then I take the short loss. If it's still in, then I'm gonna see how the overall cycle is working off of it. And be able to go from there. But I need it to load up for a second. Okay, well there it is. It's loaded up. It's on the wrong one. That's what looking at it. I need to switch over. of this. Okay, so it's actually still within the cycles. It's still in this overall pair. I don't like what I see. It won't be honest. Looking at this, I do see a counter trend line break, and I think it may end up taking me out of this cycle, depending on this overall move. I do see like a head and shoulders pattern that end up pushing up to the upside, and hopefully that may not be the case. But overall, we got another hour to see what happens based off of this. If this market does take us out of this market, for this overall move, then that means that we have to take this. We end up taking or getting out of this pair before this actual cycle ends. So we got about another 35 minutes to be able to see what's happening with this move. Hopefully it doesn't keep on pushing up the way that it is and it kind of slows down. If it doesn't, then obviously we just take the small loss. And once again, you gotta be okay with taking small losses if you want to go after long-term gains. Long-term gains, just as long as you remain to be patient, you'll be able to get those. But you have to be able to cut. Sometimes you have to be able to cut small losses out and be able to save your account, even if it's cutting down your account by a couple $100 here, a couple $100 there. Obviously, I have an account that I've been building for a long time, so you want to make sure that you end up keeping that in mind and saying what's more important, the overall account or the overall plan on the trade when it comes down to that one. You can be able to make the money back, but you want to make sure that you're not just giving up too much. All right, so with that being said, that's our Friday for us. Last month we ended up doing about 2,000. This month we basically ended up breaking even when it came down to overall trading. Sometimes it be like that, but overall net for the year we are still positive. I am happy with that right now, but obviously I wish we could have did a little bit better in October. I think there was a lot of missed opportunities just because of either greed and staying in trades a little bit too long, or two, not being patient enough. So I have to do that I have to evaluate that for myself overall. But we end up doing better when it comes down to that. Hopefully November will end up doing us very well. Obviously Scorpio season, my birthday month, and we end up going from there. But I do appreciate everyone being able to hop on with us today. If you have any questions, please make sure that you end up sending me a message. Obviously, if you're interested in being able to hop in and see what we do on an everyday basis, go down to cartercowcapital.com/start here. Be able to hop in and get a free webinar to be able to go from there. We're ending off on our boot camp for this week, starting a little bit later on today. So the people that's actually in the boot camp, obviously, I'm very happy for them to be able to finish up on that. And obviously, with our mastermind classes, we end up having a couple people graduate. So shout outs to them for being able to do that. We have a lot of people that end up doing very well, making their money back within that overall 2 months trial. So with that being said, like always, plan your trade your plan. I see each and every one of y'all starting Monday, and we'll start the new month off right. Everyone, y'all have a good one.